Hello and welcome to the Monday Technical Market Outlook for August 17th, 2009. This is Patrick Sresna. First off, I want to start with a weekly chart of the S&P 500 going back 3 decades. When we plot an 80-week moving average, it has done a very good job to depict every bull and bear market cycle that we have gone through. In January 2008, we crossed below that 80-week moving average, and around that time we began our thesis that we were in a bear market that should last many months, if not more than a year in total duration. We're now approaching toward that 80-week moving average, but I don't believe we're going to break through it on the first attempt. So more than likely we can still see some follow-through rally on the upside, but more than likely we are going to be seeing a consolidation come off those higher zones. When we take a closer look at that S&P 500 using the Spider Exchange Traded Fund symbol SPY, you can see in the last 2 weeks we've been contained in this 99 to 101 area, and more or less the bears have not been able to spur on any selling whatsoever. It's all been more or less contained in this very shallow range. At this moment, so long as the bulls keep all the selling contained like this, we have to continue to favor the upside. Any technical breaks above that 101 area opens that window for a quick rally up into the 104 to 106 area. That's around the 1050 area on the cash index, and more or less if in fact the summer high is going to come there, then we are going to approach that zone, and more than likely it will be a very short and brief moment that we're going to be up there. So everybody that's trying to time that out, make sure you're very nimble if we in fact get that. Now the alternate scenario, of course, is that the bears do bring on the selling and break below the 99 level there. If in fact we do see the technical break there, we will be looking for initially a consolidation down into the 94 to 96 focal point. But if we do get that sell-off below the 99 level and it moves all the way down into that support zone, realistically any bounce higher, we're probably not looking for that 1050 area or the 105 zone up ahead. More than likely our best case scenario then would be that we just go for a double top retest into the end of August and start a topping formation in there. So we'll see which one starts playing out. At this moment we're going to continue to favor the upside and look for that quick move up into that zone, but if we do have any technical breaks, we will see some short-term selling before another buying opportunity. Just to review our key points, our thesis since January 2008 has been that we're in a bear market that should last many months, if not more than a year. We added to that many months ago by suggesting that this bear market could end as early as the fall of 2009, but can realistically extend into the 2010 time frame. We do not want to stand in the way of the bulls on the short term here. The momentum is clearly higher, and all the selling has been contained. So at this stage, trying to call a market top is a little difficult. So we want to continue to stay with the flow of the market. But I do want everyone to understand that if we do get up into the 1050 to 1100 area on the S&P, we are going to become outright defensive, as we'll see very little upside with big downside risks. So it's important for everyone to remember that even though we're favoring the upside on the very short term, in the bigger picture we are approaching levels where we anticipate that selling. The last point there, only short-term actively managed trades are prudent. Longer-term investors still need to be cautious and avoid overexposure to the markets. Next here I want to take a look at the NASDAQ 100 using the Exchange Traded Fund symbol QQQQ, and more or less the leadership has really come from this technology sector. We continue to see very shallow selling consolidating right in this 39 to 40 area. At this stage we do continue to favor an upside breakout. We are watching that 40 pivot level. If we see some good closing price action, especially if it's confirmed by broader market positive price action, then we will look for some upside. The measured moves on the upside all are in the 42.5 to 44.5 area, and so that's some of the areas we'll be targeting on the upside if we have that technical break higher. Next here I want to take a look at the US dollar index, and this is one that we've been very carefully watching over the last month or more. We've been really looking to see whether or not this was going to continue to have a deterioration and weakening, which would have obviously been very bullish on commodity plays, but we continue to see very sideways choppy price action, and in fact we had a false breakdown on the downside that immediately reversed higher and is now consolidating above that 77.5 to 78.5 area. If the bears the US dollar bears don't grab hold of this and break this market down soon, then the bulls will come back in here. And so we're going to very carefully be watching this 79 level, more or less, on the market, 79.5. And if we start to see the US dollar index breaking above these zones, we should see a pushback to 81, 81.5, that focal point right up there. But if we do have a rally all the way back up there, then this downtrend that we've had in place would certainly be the first indication that it's coming to an end, and that then we would see whether or not a proper US dollar bottoming occurs. If that's the case, then we may in fact see a year-end rally in the US dollar, but it's certainly not going to happen in the month of August. We're just going to see more or less consolidation in here, but it's really up to the bears to prove whether or not they want to take this lower very soon. Next here, I want to look at gold bullion using the Spider Gold Trust exchange traded fund symbol GLD, and more or less we've seen some rallying higher. The pattern that we've been watching for the last month has been this wedge formation on the downside that broke higher, and we've been looking for gold to follow through up into the 97.99 focal point. And we were suggesting even last week and the week before, any breaks above 94 are bullish. But now what we're seeing here is that we're consolidating below that zone. If we can manage and muster a rally back above 94, then the window still is open for that rally to finish its move up into the 98 to 100 zone, right into that focal point. But one thing I do want to stress is that we're right now in the center of a retracement zone, and we've had in the last month this sequence of higher highs and higher lows. But if in fact we are just getting a wedging formation here that's going to technically break below this 92 and 91 zones, we in fact may have seen a major top on gold, and we'll probably see selling all the way back down into the 85 to 87 zone. We don't know which of these patterns is the one that's going to play out here, so long as the US dollar, if for whatever reason it breaks down below that focal point we've been talking about, then we will look for gold to finish that move higher. But if in fact the US dollar side starts trading sideways here, and we have technical breakdowns in gold, then we will be looking for that move down. Next here, I want to take a look at crude oil using the United States Oil Fund, which is exchange traded fund symbol USO. One thing that's not 100% evident on this chart, which is something you will see if you look at a continuous futures light crude contract chart, you'll see that crude oil actually made a direct double top. This on the exchange traded fund, it never quite reached there on the upside, but realistically, if these reversals on the downside are corresponding with a flattening US dollar that ends the US dollar downtrend, then we may have seen the highs of crude oil. So there's not enough technical evidence to officially call that yet, but with the way that's reversing off there and the fact that the US dollar is not breaking down, we do have to be suspicious of it. Next, when we look at a broader basket of commodities using the PowerShares Commodity ETF symbol DBC, we are seeing a very similar situation to what we're seeing in crude oil. We had a double top rejection right off that 23.75 to 24.25 focal point, and the selling is starting to show some big strong red candles coming in. Again, it's way too early technically to be calling this a reversal on the downside, but we have to be suspicious of it at this stage. So if we start seeing any technical breaks below $22 on the downside, then we'll start to view some different scenarios of how this will play out. That was your Monday Technical Market Outlook. Thank you for joining me.